Hello and welcome to Market View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. We start with Gift Nifty as the Gift Nifty is trading flat, which is indicating a muted start for the domestic markets. The Asian markets have also opened lower, where Hang Seng is down nearly 1%. So clearly, the cues from the Asian markets are weak. The Dow futures trade lower after cash market ended higher on Monday. US market ended higher, where S&P 500 Nasdaq did rise up to 0.6% each. The S&P is 1.2% away from its all-time closing high of 4,796, which reached in January 2022. So this is the level one everyone is watching for. The US key indices on pace to finish December with gains. The Nasdaq is up 4.8% this month. US Steel Corporation is up 26% as Japan's Nippon Steel looks to buy US rival for $14.9 billion. So clearly the US markets did show signs of a lot of action, however the Asian markets are weak. Talking about the US 10-year yield, it did rise to 3.94% as traders digest dovish pivot from the US. The Brent crude is rising and is trading at $78 per barrel as supply concerns ease on Russia's export cut decision. And last but not least, gold rises further and as we see dollar index softens below 103. So clearly this is how the global sentiment looks like. One can say it is a mixed bag as the Asian markets are weak. However, there is signs of action seen in the US markets. So let us take a look at the trade setup for today. That is the Tuesday session, and we start with the 19th of December, taking the cues from what happened yesterday into the markets. After a sharp rally in the previous couple of sessions, it was a lackluster trade for the market on 18th of December. That was the yesterday's session. However, the index being near its record high and maintaining its previous day's closing low, it seems that the momentum still lies with the bulls. Hence, experts see some more consolidation in the coming days before the market gets into a strong mood with the resistance of 21,500 and support of 21,200, of course. In the yesterday's session, the benchmark indices reiterated a bit with the Sensex falling around 170 points to close at 71,315, while the Nifty declining around 40 points to close at 21,419. The lack of conviction was evident on the daily chart, displaying classical doji formation. Despite this, the overall tone remains bullish with no apparent signs of weakness. Nevertheless, caution is warranted as prices approach a key resistance zone marked by indicators in high overbought territory. The resistance zone lies in the range of 21,500 to 21,600, representing the 200% reciprocal retracement of the October month price fall. Technically, this level also signifies a near-term target. So as we clearly see, the strong support is identified in the zone of the bullish gap around 21,200 to 21,300 levels. The India VIX, that is the volatility, the fear index jumped to the highest level in the current financial year, making the bulls a bit uncomfortable. The VIX rose by around 5.8% to 13.9 levels in the yesterday's session. So taking the cues from all of these, let's now consider and try and understand what will be the key support and resistance levels for both Nifty and Bank Nifty for today's session. To start with Nifty, Nifty is likely to see immediate resistance at 21,467, followed by 21,495 and 21,540, while on the lower side it can take support at 21,377, followed by 21,350 and 21,305 levels. Talking about Bank Nifty, in yesterday's session, Bank Nifty also saw some pullback after the rally seen in the previous couple of days, falling around 276 points to close at 47,868. The index has clearly formed a bearish candlestick pattern on the daily charts. Now, the banking index has to hold above 47,500 zones to make an up move towards 48,250 and then at 48,500 levels, whereas on the downside support is expected at 47,500 then at 47,250 zones. So clearly the index is expected to see resistance at 48,020 followed by 48,084 and 48,187, while on the lower side it may take support at 47,814 followed by 47,750 and 47,647. So these are all the important resistance and support levels which one needs to consider for the trading session for today for the major indices. Now we move towards the stock-specific news. We start with the pharmaceutical major Sun Pharma, as the company has agreed to acquire 16.7% shares in Lindra Therapeutics Inc., a company based in Massachusetts, for $30 million. Lindra is engaged in the business of developing novel delivery technology for long-acting oral therapies. So this is the news which keeps Sun Pharma in focus. Biocon is another stock which one needs to consider, as a subsidiary of Biocon. Biocon Biologics has completed the transition of the acquired biosimilar business in around 120 countries across advanced and emerging markets a year ahead of schedule. So this news keeps Biocon in focus as well. So clearly, pharma majors are in focus for the day. Vedanta, the mining and metal major, has approved the second interim dividend of Rs 11 per equity share, that is 1,100% on the face value of Rs 1 per equity share for the current financial year 2023-24. This amounted to around 4,089 crores. Keep an eye on IRCON International, as International Chamber of Commerce (ICC) has pronounced the award in favor of IRCON of Rs 103 crore against the claim of 115 crore and cost in the matter of arbitration between the company and ESCOM Holding SOC. The competent authority of IRCON has accepted the said award. Keep an eye on NHPC as well, as the company said that the board members will be meeting on 22nd of December to consider the monetization of future cash flow of one or more power stations of the company for suitable tenure. This is a part of the funding plan of capex of the company for FY24 or beyond. And last but not the least, keep an eye on Devyani International, as subsidiary Devyani International DMCC Dubai has announced its entry into the quick service restaurant, that's the QSR limited service restaurant market of Thailand, by signing a share purchase agreement to acquire a controlling interest in Restaurants Development Company Limited, Thailand. So these are all the stock specific news which one needs to consider. Keep an eye on the pharma, healthcare and diagnostic space. Keep an eye on railway counters. Along with it, the quick service restaurant space is also in focus, which one needs to consider. Let's now take a look at the FIs and DIs action. The foreign institutional investors net sold shares worth Rs 34 crore, while domestic institutional investors bought shares worth Rs 414 crore on the 18th of December. So this is how the trade setup for today's session looks like. With this, we come to the wrap of our podcast for today. To keep an eye and to sum it up, one needs to understand that we are in the last phase of the year, the last few days of the year. And of course, the December month is about to end. Everyone is waiting for the Santa Claus rally, of course, in the markets. And also, we have a new year around the corner. But of course, do understand, nevertheless, of what all the situations are, irrespective of all of the market conditions. There's a lot of economic indicative action, global and domestic events, everything which are undergoing. And we are tapping on all of it. But research is the backbone of successful portfolio creation, as we always keep saying. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.